Accounting 101 teacher used to say death, taxes, and body drop at GM. Now that third thing, that was a little, uncertain there for a while. But I think now we can say death, taxes, and uncertainty. Because some of the things I'm going to talk about today about the new Tax Act that was passed in December, we're still a little uncertain what's going to happen after the year 2012. I always like to, in doing some of the estate tax talks, try to look back and see where we've been. So indulge me for just a few minutes on that. When I first started practicing about 30 years ago, the estate tax exemption was $60,000. When Reagan became president, he instituted what we call the Economic Recovery Tax Act, 1981. And the estate tax exemption started this progression of going up, the estate tax exemption. It went from $200,000, $300,000, $400,000, $500,000, and then stopped in 1987 at $600,000. And even then, people were saying, oh, that's a high exemption or whatever, but we still saw people paying significant taxes, even with the unlimited marital deduction when the surviving spouse died. Estate tax didn't change for a good while. Clinton, toward the later years of his presidency, implemented an increase to the exemption of approximately $25,000 a year. So you went sometime in 1997, 98, the exemption was moving forward, 625, 650, 675. Bush became president, okay? In 2001, we saw the similar approach that Reagan had. The estate tax exemption took off again. It rose to $1 million for several years, rose to $1.5 million, rose to $2 million, and then in 2009, the estate tax exemption rose to $3.5 million. Now, quite frankly, that took care of a lot of folks, especially a husband and wife in a community property state like Louisiana. You had to have more than $7 million of community property assets before there was a federal estate tax problem. Let's move into where we are today, beginning January 1, 2012. The federal estate tax exemption is now $5 million, okay? So for a community property state like Louisiana, husband and wife basically would have to have total assets in excess of $10 million before there would be a federal estate tax. Now, this exemption is good for this year, 2011, and it's good for 2012. That's where the uncertainty comes in. Someone asked me this morning, they said, well, where do you think it's going to go to? I don't know. I think it's going to depend upon who controls the Congress, who the president may be. That's what these things turned on this past December with I believe, partially the November elections where a number of Republicans were elected to the House. With the 2011, with the 2012 $5 million exemption, what also was put into the law is a top federal estate tax rate of 35%. That's a real good thing because going back to 2009, our top rate was there at 45%. So there's been an actual reduction in the federal estate tax rate. Now, one thing that has come into the law, and we discussed it a little bit in our outline, and this is really a great thing, and I hope no matter what happens to the exemption in the future, I hope that they keep this provision in the law, and it's what we call portability. There's been discussion about putting portability into the law for a number of years, but it never made it. Well, it finally got there, and I hope kind of now that it has its foot in the door, that it will stay. Okay, what is portability? let's say that Mr. Jones dies this year and he has a $5 million exemption, but he only uses $3 million of his $5 million exemption. Years pass, that additional $2 million of unused exemption would just go away. Well, basically now, if a, quote, election is made, and we don't know yet how you make this election because the IRS hasn't come out with how you do this, but we think it's going to be involve having to file a federal estate tax return for Mr. Jones. But when Mrs. Jones dies, and again, this is only for this 2-year time period of 2011 and 2012, Mrs. Jones would not only get her $5 million exemption, but Mr. Jones's $2 million that he did not use. With the $5 million exemption that has been floated out there with prior legislation is a COLA adjustment. So for next year, 2012, the $5 million could go to $5,010,000, okay? And it will go up in increments of $10,000. May not seem like a lot, but at least there is some provision to allow it to increase. You know, we've had such low inflation. The annual gift tax exclusion has been at $13,000 for 3 years now. So, you know, how much this could go up in 2012 is a new story. Federal gift tax exemption. I'll tell you, I did not see this coming. Quite honestly, I didn't see the federal estate tax going to $5 million. President Obama all along has said that he was okay with the estate tax exemption going back to 3.5. So when he was on TV with the Republican congressmen and senators, he said, and it really, something to the effect, it really pains me to have to agree on some of these federal estate tax changes. And I said, what's paining him? He agreed to go to $3.5 million, and then he said that the estate tax exemption would go to $5 million. Well, I nearly fell out of the back of my chair too, because I did not know that the Republicans had the stroke, so to speak, to get that high of an increase in it. Federal gift tax, $5 million, okay? That's what the exemption is today if you want to gift. Now, that is in addition to the annual exclusions that you can do each year. Right now, you could do $13,000 to each of your kids. Your spouse can do $13,000. You can do that for your grandkids. So the $5 million is the lifetime, what we call the lifetime exemption. Louisiana gift tax went away completely in July 1, 2008. So a lot of times people they didn't want to make a $1 million gift and use their federal gift tax exemption because we had the Louisiana gift tax. If you made a $1 million gift, you would have to pay $30,000 to the state of Louisiana, and some people just didn't want to do that. So with the $5 million exemption, there are a number of questions out there. What if Congress 2 years from now reduces the gift tax exemption? Will that impact people at their death? We don't know. We don't know what they may try to do if they reduce the estate and gift tax exemption in the future. The third part of this, I know I did $5 million for the estate tax exemption and $5 million for the gift tax exemption, but you've also got now a $5 million generation skipping transfer tax exemption. I was doing this, the 5 and the 5 and the 5, and somebody in the audience asked me if I was doing the Subway $5 footlong or whatever commercial. I said, no, it's just I'm Italian and talk with my hands a lot, you know, and it's a good thing it's $5 million. If it goes to $6 million, it's going to be kind of hard to do or something. $3.5 million would have been hard to do, you know, for sure. But the GST exemption is now $5 million. So what does that mean? you want to give that $5 million gift down to the grandkids, you can do that now and utilize both your $5 million gift tax exemption and your GST exemption. So there's a lot of freedom out there to make some significant gifts.
As Kerry mentioned, there is some unfinished business for last year. If we kind of turn the clock back to this time last year and where we were where we thought we'd never be, which is the land of no estate tax. But that came at a cost. When we had the no estate tax regime in place, the cost was that the deceased heirs would inherit their basis for income tax purposes and all the appreciated assets. So what that generally meant was that when they later sold the appreciated assets, that they would be taxed on the gain at that point. So while they had no estate tax liability, they would potentially have the income tax liability down the road when they sold the assets. The exception to this under that rule was that under the no estate tax law, they did give you a $1,300,000 basis step up to allocate to certain assets. So you would have to file an allocation form to allocate a $1.3 million basis increase to the various appreciated assets. So if you had $2 million of appreciation in somebody's estate, you pick and choose which assets you'd allocate that $1.3 million of appreciation to. So from a practical standpoint, what this means for anybody in 2010 is that if they died and their estate was under $5 million, and assuming they never made any taxable gifts, then they just get the full basis step up. No estate tax return is required if they're under the $5 million, and we're kind of back to where we used to be with a much larger exemption. But for the bigger estates, we had a couple of estates last year that were over the $5 million. There's wealthy people all around the country. Georgetown passed last year because of the potential constitutional issues with passing an estate tax retroactively at the end of the year and other concerns. They did give estates for 2010 decedents the option to elect out and go back to the old rule. So you can pick between the $5 million exemption full basis step up, or say, no, I want the old rule, the no estate tax rule, with the $1.3 million maybe, and then plus the $3 million basis step up. So another thing that kind of came up last year in a lot of estates was a lot of wills have formula clauses. A lot of them tied to the estate tax exemption, some of them tied to the generation skipping transfer tax exemption that Kerry was talking about. And last year when you had no estate tax, you had no estate tax exemption, and you had no generation skipping exemption. So we had some clients that had estates where they would leave a certain amount to the grandchildren equal to the generation skipping exemption that was in effect. Well, if there was no exemption in effect, does that mean they got nothing or what? And you had to kind of really look at the will and interpret their intent. Some states passed legislation to interpret wills for 2010 that had this type of language. But then now with this new law in place that is retroactive, now you have to kind of weigh, well, what effect does that have on the formula clauses, if any, when they retroactively impose the $5 million exemption and retroactively impose the $5 million GST exemption? Does that now mean the generation skipping bequest is funded differently or at all, or for what? So some of those kinds of issues can still come up in 2010 estates as a result of this legislation.
What's the best way to utilize the exemption, utilize the marital deduction? We've used the credit shelter trust with anything above that going to the surviving spouse outright or to a marital deduction trust to get the marital deduction. But you can just as well use a Louisiana usufruct. In other words, if let's say you have a will that says I leave my home, car, personal effects to my spouse, and I grant a lifetime usufruct to my spouse over the rest and remainder of my property, for that, with utilizing the usufruct, you can elect whatever portion of that you need for marital deduction. And that way you can get whatever you want for your exemption. You don't have to utilize a trust. I know a lot of times we will have clients, their brokerage will have an estate planning service, and they send the wills and they say, well, you're not going to get the marital deduction because you've got this thing called usufruct, and we have to copy 2056B7 of the Internal Revenue Code and say, we understand you might not understand what a usufruct is, but here it is in the Internal Revenue Code, and it says we get the marital deduction. But the biggest thing out there is now with this estate tax exemption being so high and the fact that we don't have Louisiana inheritance tax, we're probably going to see more and more people do I love you wills. Husband will leave everything to wife, wife will leave everything to husband, and the survivor will control it and it'll pass to the kids. So we see a lot of, I had one gentleman, his father was an engineer. And if we got any engineers out there, engineers keep us on our toes, okay? Because they ask very good questions. They ask a lot of questions, okay? And this gentleman said, he said his dad did the living trust, and this was a really bad living trust because whoever did it, they took a Texas trust and they tried to put it in a Louisiana package, and there were just big gaps in it. It's like they left out, you know, chapters 3, 4, and 5 out of the thing, and you could tell there were things missing. But the gentleman looked at me, the son, and he said, you know, my dad was a very smart man, and he wouldn't have done this unless it was the right thing to do. And I told him, I believe you. I believe you. But unfortunately, he got caught up with somebody that did not know what they were doing, and they were just selling these kits. All right, well, we want to thank y'all for coming out this morning. We really haven't had any significant federal estate tax changes in about 10 years, so it's good to be able to talk about those.